Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for November the 16th. It's just after 9 o'clock a.m. Central Time, which of course means the daily close was about 15 and a half hours ago now. So I tried to get back on nights, stayed up to 3 a.m., still woke up at 8 a.m. So this will be an interesting day. Before I jump into the content, please do me a huge favor. Go ahead and hit the thumbs up button on this video. And don't forget to subscribe to the channel if you haven't already. So the first thing I want to talk about today is actually my Bitcoin charts, my bearish bias, and I want to try to present at least some type of case for the bulls, but it's very difficult to do. So let's just jump in. We'll take a look at the daily line chart first, and then we'll look at a few other charts, and we'll see if we can't paint a pretty clear picture for what's coming next. So this is the daily line chart. Again, if you're not sure what line charts, what they are or how they work, essentially they're just drawing a line from the daily close from one candle to the next, or whatever time frame you're looking at. So this removes all of the noise of the wicks and the tails, and you get a very clean picture of what's actually going on. We have the smaller descending triangle up here with a target down around 6 grand. We have the bigger descending triangle with the target down around 2 grand. And we have our 50 and our 200 moving averages. They're a little bit difficult to see because I'm zoomed out, but that's got to do with this volume profile, which I'll talk about in a second. Essentially, if I zoom back in here and turn the volume profile off, you can see that we had a bearish retest of the triangle. We also had this bearish retest of the 200 moving average. It failed. Yesterday, we fell underneath the 50 daily moving average, and we're trying to flip back up and maybe test it as well. So that all looks very standard bearish picture. We're still inside of the downward sloping channel, so again, still inside of a bear market until proven otherwise. This hidden bearish divergence, I'm going to leave it on the chart just so people can learn from it. I'm no longer worried about that. I feel like that's played out, right? We had the hidden bearish divergence. We've now had a $2,000 pullback from the top of this candle over here. This topped out around 10.5 on Coinbase. And of course, we got all the way down to 8,300 and something yesterday on Coinbase. So, almost 2,200 bucks. I'm fine. Hidden bearish divergence done, over with. The line that I'm more interested in on RSI on the daily chart right now is actually this upward sloping support line, right? I do feel like if we get down and touch this, it could be a good opportunity to take some type of swing long position. Doesn't mean that I think we're out of a bear market. It just means that I think that it's probably due for some type of relief bounce. All right, kind of like we saw right here, we had this really nice bounce. This actually bounced over $1,000. Even though it's in a bear market, would have been a really nice long play. And then of course we have this bounce that everybody knows about, which bounced over $3,000. So I will be looking for long positions depending on how price looks if RSI gets down to this line. Okay. Now what I want to do is I want to turn back the volume profile, and I'm going to zoom out so that we get a good sample size here. Essentially what you're looking at with this volume profile, and it's kind of messy, I know, but let's just turn everything. I don't really want to turn everything off. Basically, these bars on the right hand side, they're measuring how much volume was traded at those price levels. And when you get these large areas where there's no volume traded or small volume traded, those are called volume gaps. Typically speaking, not always, but typically speaking, you will see these get filled in eventually. Now, the reason I say not always is because obviously we have a volume gap down here around 1,400 bucks. It was never filled in, right? It just kept going up. So there's no guarantee. However, that's one of the reasons that I've been so bearish this year, is because we didn't fill that in. And in 2014, we had a false rally that looked like it was a bull market. We bottomed out around 300 bucks. We false rallied up, and then it actually crashed all the way down to about 150 bucks. So I have this suspicion that that's what this is. This is just a longer cycle where this was a false bottom, this was a false rally, and that this will eventually come down and fill in this volume gap down around $1,300. And of course, if it comes down here, it's going to fill in this gap and this gap as well. And you can see that our 4-year trend line going back to 2015 actually does run right into that gap. Okay. Also, that happens to be the target for this descending triangle. So we have a lot of convergence that's telling that story. That being said, a lot can happen between $8,500 and $2,000 or $1,500. So it doesn't mean that I'll never buy Bitcoin or that I won't buy my Bitcoin back. If we do put in bullish structure, which I've talked about multiple times, it doesn't matter where the price is, whether it's 8,500, 7,500, 6,000, 4,000, whatever. If we put in bullish structure, I'm going to go long until proven otherwise. Okay. This was not bullish structure. This was simply a dead cat bounce. Okay. And for anybody that says, James, it wasn't a dead cat bounce, it was. That's not up for debate. It was a dead cat bounce. If it wasn't a dead cat bounce, it would have kept moving up, right? It's moved back down. Now, it could develop into bullish structure if this thing, stops sliding down and starts to head back up and, ends up peaking above this peak here. That would be bullish structure. That would be up, down, up, right? And of course, if it does that, it'll break us out of this downward channel. So, of course, I would flip bullish. I've been trolled to death for being a bear. I realized last night that I've allowed people to bring me down to their level. And I'm done giving those people any attention. From now on, the trolls will just be ignored or blocked. And that's going to be the way I handle that, because I'm not going to deal with all the negativity, right? I've asked people over and over again to post a bullish chart. If they don't like my bear chart, I've asked people, please just post a bullish chart. I did it again today, right? I updated this chart and I said, if you're bullish and have a rebuttal of this, please post your chart. No one ever does, right? They'll come there and they'll call me names and they'll talk shit about my profile picture. Last week it was about my beard. The week before that it was about how big my head is. Today somebody came and talked shit about how messy this desk was. Guys, listen, this desk was from 20 freaking years ago. I was 19, maybe 20 years old, and I was on drugs, right? Literally, I don't mean like, oh, I smoked a little pot. I was on hard drugs. I was on coke and some other hardcore stuff. So yeah, the desk was really, really messy, right? And also, so what? I'm not ashamed of my past. I made a lot of mistakes. It was also my own 2 months after my 17th birthday. Shit happens, right? My dad dropped dead in our living room. My mom wasn't in the picture. So, did I make some poor decisions? Sure. Would anybody else have made poor decisions in that situation? I don't know. Maybe. But that's what these people do, is they latch on to these profile pictures. I had a picture of my daughter on there, and people started talking about the picture of my daughter, right? Saying, oh, that's not very safe to put your daughter on there. Oh my God, these people just don't shut up, right? So I've asked people to post bullish charts so that I could maybe see if I was missing something. Nobody's done it, guys. Which to me says that the people who are ultra bullish are not ultra bullish because the chart supports it, but rather because they're emotionally tied to it and they can't stomach the idea of their coins going down in value. A friend of mine, and I say friend, I don't know him. We just got to know each other through Twitter because he's one of the people that has sent me private messages and support saying, don't let these people get to you, kind of thing. But he posted about this today, saying that isn't it interesting how when we broke above the 200 daily moving average, everybody was super bullish. It was, oh my God, this is a bullish sign. This is a bullish sign. But now that we're underneath it, no one wants to talk about it, and instead everybody's talking about the halving, right? And it's like he says, I guess technicals are only important when it fits your bias. And the same thing, like I said, hey, ding, ding, ding. Same story with the 50, right? The 50 moving average was the super special line. If we stayed above it, we were in a bull market. We've been underneath that now several different times. Nobody's calling it a bear market, right? Even though it is. The 21-week moving average was another super special line in the sand. As long as we're above it, it's a bull market. We've been under it for a couple of months now. And again, nobody's talking about it, right? So you have to be really careful, because this market it's driven by emotion. And emotional people will say things and do things to make themselves feel better. And sometimes that includes posting bullish charts that aren't really bullish. Not even that, because no one's posting the freaking charts, right? They make up excuses. Oh, the halving is coming up. Scarcity. This mass adoption, institutional money. Guys, if you don't believe that institutional money is already in this space, I'm not sure what to tell you. Who do you think shorted Bitcoin at 20 grand? It wasn't the Moon Boys that were shorting Bitcoin. You notice how Bitcoin just kept going up, 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 up? And then on December 17th, 2017, the CME futures launched, and what happened? The market crashed. That was institutional money. They were shorting Bitcoin, guys, right? They've been here. They've been playing the retail investors like chumps taking their money. And they pumped this thing up, and what did they do? They were accumulating back here. This was accumulation. Everyone agrees on that, bears and bulls alike. They pumped it up here, and they started distributing all these coins they bought back here. And this is where people disagree, because people keep trying to call this reaccumulation. Let me just tell you, okay, Wyckoff aside, because people are trying to discredit Wyckoff because of the high volume pump. Fine, I won't talk about Wyckoff anymore. Doesn't matter. This was distribution. You know it was distribution because in accumulation, you don't go south. You consolidate sideways, and then you continue going north. One of the most bearish signs that exist is when you're in an uptrend, a strong uptrend. You have a period of consolidation and you fail to continue the trend. That in itself is a reversal signal. That in itself is a sign that something is wrong, okay? So enough about this daily chart. Let's take a look at the 3-day chart. I posted this up, an update of it yesterday on Twitter. And this chart, I guess people want to discount it because it's so simple, but guys, trading is simple. The charting and the technical analysis and the patterns and all that kind of stuff, that's all basic stuff that literally any 10-year-old can learn in a week, right? What gets people in trouble is emotion. It's very, very easy to read these charts. It's much more difficult to have the courage to actually follow through and take that trade. But if we look at this is very textbook stuff. We had a high in 2017. We had a low in 2018, right? We retraced up to the 61.8 Fibonacci level, which is the golden short zone, right? In a downtrend, that's where you want to be shorting at, or at least looking for shorts. We came down, we bounced back up, we moved down again, we came up, and here's your cliche golden short zone. This was the 61.8 Fibonacci level. And see how this little tail, wick just barely peeked into this level? Same thing here. What does that mean? That means that there were whales, essentially, waiting there to sell their coins. They were waiting there to distribute those coins, and they were waiting there to go short. And what happened was this thing got shoved right back down. And again, if we look at the 3-day RSI, this bottom of the red box is a very clear indicator of support. When we get there, it makes sense to consider, hey, maybe I should not be short right now. Maybe I should be looking for longs. You can see we didn't get perfect touches here, but very, very close on both of these bounces. This bounce was over $1,000. This bounce was over $3,000. We can see that when it gets to the top of this box, it's strong resistance, right? Came up, tested it, failed, retested it, failed. Tested it, failed, retested it, failed. Same thing we got here. We came up in a strong move, we tested it, we failed, we retested it, failed. These are double tops. These are textbook double tops, guys. Very, very bearish, okay? Now, like I pointed out in yesterday's video, the one line that I would pay attention to is this line right around 43 RSI, because if you notice that's the top of our W here, right? That's a double bottom. And that's often a place that's going to get retested on a bullish retest, and sometimes you'll get a bounce off of it. So like right here, it was retested, right? It broke out, retested it, and then boom, we started off our bull run. And you can see back here, it wasn't perfect, but it was resistance and a fairly good indicator of resistance / support, right? Broke above it, retested it up, support, so on and so forth. And then once we fell out of this box, that was a sign that the bear market was bottoming out and that things were coming to a close. So if we get to a point where price falls out of the bottom of this box, to me, that's going to be an indication that, hey, the bottom is probably near, okay? So that's how I'm trading with that 3-day RSI box and the Fibonacci levels, okay? As far as the smaller time frames, guys, this is a lot of mess. This is a lot of chop, and I don't necessarily think it's a great idea to try to trade this unless you're just really, really good at ranging markets. All of these red lines are potential areas of support / resistance, right? And these are not very far apart. This one's 82.40. This one's up around 83.30, right? I'm not personally excited about trying to trade a 1% range, okay? So I'll probably just chill out this weekend unless I just get an alert and a really nice, perfect opportunity comes in. I'll probably chill out. To me, it looks like it's finding support in this line, but I went long in this line twice yesterday. Got stopped out both times for break even minus fees. It would start to go up and then fall back down and stop me out. So I'm kind of tired of this line. I'm probably not going to play this today. What I'm waiting for is I'm waiting for it to get up around 8,600 bucks. And if things still look bearish, that's a position, or an area that I'm going to look to open a short position. Again, if it still looks bearish at that point. So that's the Bitcoin picture. As far as the altcoin picture, guys, I'm just not interested in alts. And I'll tell you why right now. It's because of this chart right here. This chart ruffled some feathers like most of my bearish charts. But I would rather play it safe than sorry. It's not a lottery ticket. If this thing goes up and I don't get to invest in it, it will pull back at some point. There will be a time to invest. I don't need to chase this thing down. What we had this starting to look bullish, right? We had this ascending triangle back early in the year, came down, retested this line, which was amazing. I was looking really good, came down, retested this neckline of this W, right? Down, up, down, up. So I was getting bullish on it, but then we had this happen where it turned back over. And the problem is, guys, this right here was a large head and shoulders, right? And this had a target, very, very low target. This was basically a target of 0, right? Don't think that's going to happen, right? Don't get me wrong. But it's not good to see. Then when we came up here and I started to get, I thought maybe this is going to be bullish. We put in this smaller head and shoulders, which again is the top of an uptrend. So it's not that I'm bearish where I think they're going to dump, because I still think they have the potential to go up. It's just that it's not enough potential for me to risk money, okay? You can see it bounced off of this line of support. That's a good thing for the bulls, okay? But the bulls are going to need to get over this area right here, because now this is the line of resistance, right? If this can get above that, maybe do something like this, then I would like to, take a look at alts. But until that happens, I'm very skeptical that this is anything more than another relief rally, okay? And the reason I say that is because if you look, again, look where it came up to. This was old levels of support. It came up, retested. It had a false break above it, right back underneath it, right? It just looks like another bearish retest. That's all that looks like for now. All right, so I clicked through all of my charts there while I had the video paused. Wanted to make sure I didn't miss anything. I probably did. Every time I do one of these videos, right after I get done uploading it, I'm like, oh shoot, I should have talked about this. But the video is 22 minutes long now, depending on how I edit it, so I think I'll wrap up there. Again, if you have bullish charts, please show them to me. I'm not going to shut you down. I want to see the other side, okay? It's much more fun being a bull than it is a bear. So with all that being said, please remember that I am literally some guy sitting in a spare bedroom. Nothing in this video is financial advice or trade advice. You should always do your own due diligence before making any type of investment in cryptocurrency. If you enjoyed this video, please be sure and give it a thumbs up and subscribe to the channel. And don't forget, you can check the description for links where you can follow me on TradingView, Twitter, and where you can join my free Facebook group. This is James with Crypto Common Sense. Trade safe.